Hi guys, this little video here is going to help highlight the importance of understanding the factors that shift the supply and demand curves. So this is a chart of Southwest Airlines stock over the past year. And back in June or July of last year, price of oil was at around $110 a barrel. And since then it has fallen all the way down. It's now around 60, but it fell all the way down to 43 in January of 2015. And so as the price of oil falls, so did the price of gas. And what that really did is that created more money for all the citizens of the United States. When the price of gas falls, we don't just drive a whole bunch more, we end up just saving the money. And so economists have estimated that the decline in gas prices has saved about $1,000 per household in the US. And we know that what happens when we get an increase in income, that we increase our demand for normal goods, or the demand curve shifts to the right. Well, airline tickets are a normal good, and so let's take a look at Southwest Airlines stock kind of in response to falling gas prices. And so as the price of gas falls, we can see that the Southwest Airlines stock has done a dramatic rise all the way from, say, $24 a year ago to $47 at the peak in January. And so if we think about it, this is the demand curve shifting to the right. If Southwest is going to receive a higher price in equilibrium and sell more tickets in equilibrium, which is what happens when the demand curve shifts to the right, we should expect their profits to increase, and therefore people are more willing to buy their stock. What was this little blip in October? Well, this was the Ebola virus. And so this again is kind of how preferences impact demand. If you think when you get on an airplane you might catch Ebola, you're certainly not going to want to buy an airline ticket. And so that impacted the demand for airline tickets. As soon as the Ebola scare went away, the stock rebounded and continued its march higher because the price of gas was so cheap. Since then, gas has increased, and so have gas prices. And so what happened is we've seen the stock kind of come back down and retreat. And so that just highlights kind of why it's important to understand the factors that shift demand. We can now understand how changing gas prices on one end is going to affect this individual company, Southwest Airlines. If we take a look, Royal Caribbean kind of does the same thing as Southwest. They're a normal good. People take more cruises when they have more money. And if we look at their chart, it follows a very similar pattern. Back when oil was $100 a gallon, it was at $53. It marched all the way higher to $85 when oil bottomed, and it had the same trough in October thanks to the Ebola scare. What we've noticed is since oil bottomed and started rising in price again, and so did gas prices, we've seen the stock give up a lot of those gains that they had that were caused to decreasing gas prices. And the last thing I want to show you is let's look at Chevron, who sells oil and gas, and look at what happened to their chart over the same time frame. Remember, their product was getting cheaper, and so kind of when oil peaked back in July of last year at $110 a barrel, Chevron was trading at $134. As oil fell in price, so did Chevron stock. And here in January, when it bottomed, we can see Chevron fell all the way down from 135 down to 102. Since then, it has rebounded and kind of come back up to around 109, 110, and so that's because the price of oil has started going back up again. Now, what causes the demand for oil? Really, it's nations and hot economies. And so when Europe goes into a recession, that has a big impact on the demand for oil. When the demand for oil drops, the equilibrium price falls and the quantity falls, and that's sort of what happened to cause this big decline in the price of oil. So again, I just wanted to highlight why it's important to understand the factors that shift demand, because it can help you understand the health of individual companies. And since this is a microeconomics class, we care about individual companies and how things in the economy are going to impact those individual companies. All right, I hope you enjoyed the demonstration. Have a great day.